Today we're covering one of the most innovative protocols in the DeFi space. It's called Gearbox Protocol, so without further ado, let's jump straight into it. Now, Gearbox Protocol is something that I've been a big fan of for a long time. I've talked about it many times as well. But today we're going to do a deep dive. We're going to cover everything that you actually need to know about Gearbox. So look at the contents today. We're going to cover so much so that if you're completely new to this, by the time you're at the end, you're going to be an expert. As always, we've got lots to cover, including the bull and bear case. I'm going to try and be as non-biased as possible, but I should disclose that I am an ambassador for Gearbox. So just want to put that out there. But either way, like I said, we're going to cover lots of things so that by the end of this video, you're an expert in everything to do with Gearbox. So without further ado, let's first of all talk about two different issues. Issue with borrowing and then issue with leverage. So what is the issue with borrowing in DeFi today? Well, as I've written on screen, there's one word to basically demonstrate this. It's the fact that most of the borrowing that we do has to be over collateralized. And you can see from this image that I have on screen, this is Aave. Many of you will be familiar with this. For those of you who aren't, this is like the leading money market that we have at the moment. It's basically the place to get a loan. But the issue is that you have to over collateralize your loan. And so essentially, let's say if you wanted to borrow $500, you kind of have to put $1,000 worth of collateral down. And you kind of have to have quite a high collateral ratio so that you kind of avoid liquidation. And this is not very capital efficient whatsoever. It's like the complete opposite in the real world, where we can often get under collateralized loans. We have this issue in DeFi today where we're not really able to have a proper credit system where you can get under collateralized loans. So that's just kind of the way that crypto is at the moment. But Gearbox definitely tries to solve this, and we'll talk about how it does that in a moment. But this is one key issue that we have with borrowing today. Now, when it comes to leverage, we have a number of issues. I think, first of all, the fees associated with them, slippage, and of course, the smart contract risk as well. Now, when it comes to leverage, there's three main forms that you can take. You can either use perpetuals, which often have high funding rates. So that's what I mean by fees here. There's liquidation risks as well. With options, there's not really many options to choose from. You have poor slippage, liquidity is quite poor, and of course options are time weighted. When it comes to money markets, as we've just mentioned, they're not the most capital efficient. You have to get an over collateralized loans, there's liquidation risk, and of course there's borrowing fees as well. So this is a picture from GMX, a kind of a popular perpetual exchange, and you can see, look, there's fees associated with it. There's open fees, there's closing fees, there's price impact, and then of course the big one is the funding rates and liquidation. Liquidation, especially when it comes to high leverage, can be very high. And secondly, when it comes to funding rates, especially in a market like we're in at the moment, it does add up over time. So if you want to farm or hold a position for a long period of time, when you're in a market like this, like we are in right now, funding rates are very high. So you're going to be paying 60, 70, 80, maybe even 100% APR to basically keep your position open. And so really, if you want to hold a long-term position, it doesn't really add up over time. So what is Gearbox Protocol? So Gearbox is basically the composable leverage protocol. And this is a really key word. We're going to talk about it lots. Composability. Basically, Gearbox enables the leverage of literally anything on chain. And it's powered by these credit accounts that we're going to talk about in a lot of detail shortly. But these credit accounts essentially enable you to get under collateralized loans and leverage pretty much anything by doing so. Now, it's powered by credit accounts, and there's two main parties that are involved within Gearbox. You have the passive lenders, and on the other side, you've got the leverage borrowers. So these two parties basically feed each other, and that's essentially how Gearbox work. Now with passive lenders, they simply can deposit their assets, whether it's USDC, whether it's ETH, simply deposit, earn yield, earn from the borrowers, who obviously have to pay the borrowing fee, earn gear emissions or gear tokens as well. They can earn points as well. It's pretty simple and straightforward. I'm going to show you what the interface looks like as well. There is a reserve fund as well. It's always good to know. So they're just kind of passive lenders. Pretty straightforward, actually. The interesting side comes from the other side, the leverage borrowers, who basically borrow from these lenders, and they are under collateralized loans. And so you can actually leverage up that way. So for example, if you only had like 5 ETH, you could actually borrow like 20 ETH and use that for your various activities. We'll talk about how that works exactly, because I'm sure many of you have questions like, what if someone just runs away? What if someone just wastes it all? What if someone just buys like some meme coin and it goes to zero? Like, then what happens? I'll explain it all, so don't worry. Just make sure you carry on watching till the end. And for those of you who are new to watching my videos, please subscribe, please like the video, and I want you to drop a comment down below as well. That really helps me out too. So going back to it, leverage borrowers, they've got many things that they can do. They can leverage farm, they can leverage trade, and they can leverage points. We all know that points are the main craze at the moment with airdrops, points being prizes. We'll talk about that as well in a moment. So how does it work? Let's talk about these credit accounts. So these are basically an isolated smart contract. And now borrowers, when they go to Gearbox, they can open up one of these smart contracts. These are called credit accounts. You'll have one credit account when you go to Gearbox for every single activity that you do. Now, the smart contract has some key features. First of all, funds cannot be removed from these smart contracts whatsoever. So when it comes to, let's say, a borrower borrowing 20 ETH with a 5 ETH collateral, that 20 ETH can't actually be removed outside of that smart contract. It has to remain within those bounds. And secondly, there are selected apps that can only be used, selected apps and selected smart contracts, I should say, that can only be used with this credit account. And so this essentially assures the safety rails for the entire Gearbox ecosystem. This picture should try to explain kind of how this works a little bit. So you've got the lenders, the passive liquidity providers who basically provide liquidity into the pool. And then you've got users who will basically create these credit accounts, basically take these assets that are in the pool from the passive lenders and then use them within whatever apps they'd like to use. Now, when I say whatever apps they'd like to use, these are chosen already by the Gearbox governance DAO, and so you can't actually use them on any app that you want. They're pre-selected already, and there's a whole whitelist process for them. So a few things to make note of. All the trades and farming opportunities that you can actually do on Gearbox, they don't actually happen on Gearbox themselves. They happen on third-party protocols like Uniswap, Curve, Yearn, Renzo, EtherFi, whichever kind of protocols are accepted on Gearbox. They don't actually happen on Gearbox, they happen via those. Your assets never end up in the custody of like any one person or company. They're always within these smart contracts, these credit accounts. And also Gearbox it's not actually a trading platform or protocol. The protocol doesn't have any order books. It's not an AMM. There's no market liquidity on Gearbox themselves. There's no funding rates on Gearbox. Gearbox doesn't have any of this stuff. Gearbox just facilitates these lenders and these borrowers to basically use these third-party protocols in a manner on Gearbox via these credit accounts. So the credit account has an allow list policy, and there's two main things to make note of. There's a contract list, and this essentially ensures that only certain contracts can interact. Only users can interact with only certain contracts via these credit accounts. And then there's allowed token list as well. So when it comes to like using Uniswap, you can't actually use any random meme coin or any random contract that you've created that might have a vector for drainage or anything like that. These are generally going to be some of the more blue chip assets that we have in the space. Now, both of these policies are managed by governance, and that's where the Gear token comes into play. But we'll talk about that as we go through the slides and when we eventually talk about the Gear token. So the credit accounts are really key in basically enabling like you to get this leverage, and you'll understand it in a little bit more detail when I show you some examples too. So here's the passive pools. These are the passive lenders. This is like one of the, as I mentioned before, there's basically two parties on Gearbox, the passive lenders and the leverage borrowers. So this is what the passive lenders can do. They can basically go, this is the ETH mainnet. So you've got USDC wrapped to BTC and ETH. You can basically supply them and earn some yield. Yield's pretty good right now. And that's because there's a lot of demand for borrowing with some of the recent updates. You can see, look, you can earn over 20% on ETH. I think even USDC is even higher than this right now. So you can actually earn probably 20 plus percent. On Arbitrum now, there is USDC and ETH that you can basically supply. And it's pretty simple. You literally just supply and earn. That's literally it. You earn organic real yield and gear token emissions, which you can do whatever you want with. And as you can see, there is a reserve fund of $450,000. I know this isn't a lot, but at least it is something. And we'll talk about some of the safety precautions that Gearbox has taken via some of the audits on one of the next slides as well. So what the interesting thing really comes with the other side, the other party, which is the leverage side. So there's three main things that you can do. There's leverage farming, there's leverage points / leverage restaking, and then there's margin trading. So we're going to talk about each of those individually and show you kind of what it looks like. So here's leverage farming. Basically, you can go open up your own credit account, and they have pre-made strategies involving Yearn, Curve, Convex, Maker, Rocket Pool, Lido, basically all the big blue chip DeFi protocols. And essentially you can borrow up to 10x your collateral. So you can see in this example, I've deposited, or I'm about to deposit 10,000 USDC. I've decided to choose 5x leverage, but you can up this all the way up to 10x, and you can see that I'm basically playing around with $50,000 worth of Yearn Vault USDC. So this is Yearn USDC is obviously on Yearn Finance. This is USDC in a strategy that's earning some yield, and by basically leveraging up, by having 5 times the exposure, you're able to earn 25% APY. You're paying a borrow rate of around 3.3%. And you can see, look, your assets are 10k USDC, your basically debt is 40k, so you're leveraged up 5 times because you've got $50,000 that you're playing with. There is a liquidation price here as well, but you can manage that yourself, and that's pretty much how that works. So you can decide to use any of the strategies that they have available. There's many strategies available across all of these different protocols, whether it's leveraging USDC, whether it's leveraging CRV assets, whether it's leveraging DAI and stake DAI, or even some of your favorite LSTs. You can do that directly here. Now, leverage farming with the points is really, really interesting. And currently they have, in terms of restaking, they've got EtherFi and Renzo. Again, you can basically leverage up the same way as you could do above. Now, they did recently also introduce Athena. We've talked about Athena on the channel not too long ago. Athena are introducing, or have actually introduced, this very innovative stablecoin called USDE, which has some very, very high yields. They currently have a shard campaign, which is probably for their governance token right now. So you can earn leverage points this way. And we all know that points basically mean airdrop. And essentially, the cost of points when you're earning via Gearbox is actually significantly cheaper than what points are selling for on OTC markets like Whales market. And so that's why a lot of people are doing this right now. But this is essentially what it looks like. Let's say if I had 10 ETH, I could deposit it into the credit account, and I would be able to borrow around 50 ETH worth of easy ETH, which is basically going to give you a 5 times multiplier to your eigenlayer points and a 10 times multiplier to your Renzo points. And you can borrow for around 20% APY. But the idea is, look, people think that the points which are hopefully going to result in an airdrop are going to be worth significantly more than that. And we'll talk about some of the calculations as well in a second. So here we go. So what's really interesting is like the cost of borrowing, when you calculate like how many points you're going to get based on the cost per point at the moment, like with EtherFi, it's around 3 cents a point. And when you go to like Whales market, you can see that eigenlayer points at the time of recording. Now, of course, they might be different in future. They could be higher, they could be lower. So please just bear that in mind. But at the moment, they've been selling for like 15 cents per point, sometimes a little bit lower. But generally what that means is that when you're farming eigenlayer points or restaking points, I should say, on Gearbox, you're basically getting them at like 1/4 or 1/5 the price of what the OTC market is selling them for. And so that's why a lot of whales, I should say, are really taking advantage of this, because they can go in with size and therefore they're able to really make a lot of money that way, especially if you can make like 4 or 5 times by farming with your ETH. If you're not doing anything interesting with the ETH right now, why wouldn't you utilize something like this? The third product is margin trading. It has a really lovely interface, very clean, minimal. And again, it works exactly the same way. You basically choose the pair that you like to trade. You can go long or short. You simply deposit some collateral and then you basically choose how much leverage you'd like to take. They do have this thing called boosted trade, and this essentially can reduce your overall borrow rate. But yeah, that's really good. And again, one of the main things that I want to point out here is that there are a number of benefits, and this is actually called pure margin, and it's not actually an abbreviation. It actually means pure leverage. And the reason why is because we're not actually using a perpetual here. We're not using any options here. We're actually trading with real assets. When you're using Gearbox, you're actually borrowing assets from dexes like Uniswap, Curve, Balancer, and these trades are actually happening on those dexes, not inside of Gearbox itself. What that means is that there's no funding rates because you're borrowing, you're not actually trading a perpetual. There's no price wicks because some of these, let's say Uniswap, for example, it's an AMM. It doesn't actually use oracles. The AMM is what helps discover price. And so you kind of reduce that risk. We do have Gearbots as well, which can basically create limit orders, stop losses, manage all of that stuff on chain. You don't have to trust the server, which is great. And you can actually farm with your leverage positions. And so if I take a look here, look, as I mentioned, like with the boosted trade, you can actually, let's say if you are going to borrow wrapped ETH, you could basically convert that into ST-ETH. And so you're actually earning extra yield that way. So you're trading ETH, but you're earning the ST-ETH yield by trading it. So that creates some really, really interesting strategies. I think there's 4 main strategies when it comes to margin trading on Gearbox. You can basically long a position, and that's essentially borrowing a position to buy an asset with the expectation that its price will go up, and then you sell the asset and then repay the borrowed loan, keeping the profit. Shorting is basically the same as that. However, because with shorting you can only short the assets that you're borrowing, currently that means that you've only got BTC, ETH and USDC. However, Gearbox are going to release other passive pools, and when they do so, that should mean that there are a number of increased assets that you can actually short directly on Gearbox. You can actually use those booster strategies. So like I mentioned here, like if you're going long on ETH, why don't you go long on ST-ETH and earn the staked yield alongside that, which is what you can do. But it doesn't just have to be ST-ETH. It can be SDAI, it can be Yearn Vault strategies, Curve strategies, you name it. Like as long as it's on the allow list for Gearbox, you can basically do that. And that's what I really mean when I say Gearbox is really composable. It builds upon all of these different protocols that we have today, and it works so well because of that. And the last one is the basis trading, where you can basically open up a position on Gearbox. Let's say the borrow rate is, I don't know, 5% on here. You could actually go on to another perpetual exchange and basically short ETH there, where you can actually get paid potentially in funding rate. And so that can be a really nice delta neutral strategy or pseudo delta neutral or something like that. Essentially, there's lots of different strategies that you can do here, and you can basically arbitrage the difference between the borrow rate and the funding rates that you can find on other exchanges. So that's pretty much margin trading. I think it's fantastic. There's so many opportunities here, and so it's very, very unique. Like, I don't know another protocol that has anything like this at the moment. We will talk about other protocols and competition later, but I think Gearbox really has some really key unique elements for it. Now, what's new? Well, previously Gearbox was really a whales game. Part of the reason was it was on ETH mainnet, and with the way that gas fees are, and the way that the credit accounts worked, you really had to have fairly decent size to really open up any positions. Now that's changed as of around a week or two ago, because Gearbox is now on Arbitrum. And so this really opens the floodgates for many, many more people to really jump on and try out Gearbox, which I think is fantastic. They also recently announced Renzo. They initially had EtherFi in terms of their restaking product. Now they have Renzo. And as I just mentioned, they have Athena as well, where you can basically get 90x leverage on the shards, which I think is absolutely insane. And a lot of people really like that. So lots of recent features. This was only like a few days ago on the 11th of March. And I think this is only just the beginning, because you have to remember that Gearbox is the place to leverage anything you think of it, you could basically leverage it on Gearbox. So in terms of stats, like TVL's really been going up only, especially after the Eigenlayer narrative. I think margin trading volume has also similarly picked up, and I've got a chart to basically demonstrate that too. You can see there's 150 million in TVL, over 100 million borrowed as well. Annualized revenue over $5 million. That gives Gearbox currently a PE ratio of sub 20. Now, I don't want to be one of those boomers who's basically telling you about PE ratios and things like that. I like to speculate, but I think it certainly helps me speculate when I see really good metrics like this. Here's a chart basically just highlighting like how in recent weeks like Gearbox TVL has gone from like 30 million all the way to like 150 plus, really spearheaded by finding some what I'd like to say product market fit with these restaking protocols that have been introduced on Gearbox and kind of getting leverage points. But in terms of margin trading as well, look, you can see in recent weeks like this is really been shooting up. A lot of people trading on Gearbox, and you can see the volumes that have been done on the underlying dexes with Uniswap Curve and Balancer there. So yeah, really good to see all of these metrics up only at the moment. Now, governance is actually a really, really important thing in the Gearbox ecosystem. And the Gear token actually plays a really, really critical role in how all of this works. Now, I think Gearbox, the Gearbox DAO, I should say, is probably one of the best examples of how governance should operate on chain. They have a Notion page, which basically has everything that you need to know about how governance within Gearbox works. They're very, very transparent with everything. They have a monthly report for literally everything they do. They even tell you all of the salaries of all of the staff. I think it's fantastic and really, really good, really good, really good to see. Now, in terms of like the DAO, like what do you actually do with your Gear tokens? Well, you basically stake them and you can vote on protocol parameters, and these protocol parameters are really, really important because they include things like changing the allow list, changing the protocol list, adding new assets in, changing the liquidation thresholds, having different collaterals, even talking about revenue share and protocol share, protocol fee models and things like that. So I think because of this, like the Gear token actually has, I think governance here is actually probably more important than many, many other protocols where you could argue that governance is somewhat of a meme. But I think I'm really, really impressed with like how Gearbox have done it here. And I think they really show an example to other protocols like how it should be done. So the Gear token is really, really important, as I mentioned, for governance, quotas and gauges, and voting on how they are for all of the different assets that they support. We'll talk about that in a second. You can actually use Gear and DeFi as an LP or collateral as well, but again, we're not going to focus too much on that. Now, they have VE Gear with a reverse voting escrow model, which basically reduces the voting power from the initial core members and the initial contributors, kind of balances it out a little bit, which is nice to see. But for me, what's more interesting is the Gear wars. Now, Gear stakers control the issuance of Gear tokens to all of the different assets that you can leverage on Gearbox. Now, the base utilization rate and the extra quotas rate, they're different for every single asset. And essentially, when you have your Gear tokens, you can stake them and then vote for where you'd like to see emissions flow to. Now, protocols and whales can stake their Gear and basically change those interest rates. They can make them lower, they can make them higher. Essentially, this creates an entire market for bribes. This also creates the Gear wars, in my opinion, because I think when you think about the different assets and the different protocols competing for liquidity or competing for volume or competing for basically people to hold on to those assets, in the case of restaking, they are competitors of one another. Let's take EtherFi and Renzo, for example. Now, you can see here in this chart, like, EtherFi obviously started first on Gearbox, but since the introduction of Renzo, they've basically been out competing EtherFi completely. There's probably like 3 times more demand for Renzo ETH at the moment than there is for EtherFi's ETH or ETH. And so the question is that I've posed here is like, will protocols fight for Gear in order to stake it and then vote for their own assets? Because in the case of EtherFi here, you'd have to think that really if they want to still compete with Renzo at the moment, well, they need to get some more emissions onto their pools, or they need to do something to really attract more liquidity there to their own asset. And so I think that's going to be a big component of the Gear token value. And I think as we see more and more assets being listed on Gearbox, especially when it comes to the restaking protocols, I think Gear tokens will be bought up by these protocols rather than retail. And just like we saw with the Curve wars somewhat, I think the Gearbox or the Gear wars certainly are important for that. So yeah, I hope that basically helps clarify some thoughts about the Gear token and kind of where I see value for it. If for any reason you haven't really understood, please just let me know. Drop a comment down below. I'll try and explain it in a little bit more detail, perhaps in another video or a thread on Twitter or something like that. Let's talk about tokenomics as well, because I think that also plays an important role when it comes to investment thesis. 10 billion max supply. Currently, there's 4.8 billion in circulation, which some of you might think means, wait, hold on a second. That means there's like 52% of tokens that aren't in circulation. Well, actually, the DAO own 40%. And so ultimately, that means there's like 10% or less of tokens to come out in circulation. VCs have basically been mostly unlocked, which I think is really great. And so that gives us currently a market cap of 91 million with an FTV of 189 million. But the thing is, right, this 40% that is owned by the DAO isn't really going to come out all in 1 year or anything like that. So I don't think like this FTV really matters that much. I think the market cap is way more important right now. And that's because that's pretty much most of the liquid tokens right now. And if you look on the Notion page, you can actually see like the previous seed rounds that the Gearbox has done, and you can see like they raised at 150 million FTV, which is pretty much what we're at right now, like 20% higher. But these unlocks end in September 24 and July 24, and these were only like 1 or 3% of the supply. Whereas like the bigger one, this lockup has ended in December 23, like 3 or 4 months ago. And so I think this is really good. Like generally, I think the tokenomics here are much better than you have like other newer protocols right now, which have like significantly higher inflation. You have some protocols with like 2, 3, 4% inflation month over month. That's not the case here with Gearbox, which I think is good to see. So who's behind Gearbox? Who are the team behind Gearbox? Again, you can see all of the previous contributors and you can see the current contributors. You've got 0x Maiko, which is basically one of the lead developers, a ton of other developers as well, front end and smart contract. Main marketing guys are Mogglesect, Amplis, Ivan, and Nikki. Like these guys are amazing. They've been very helpful to me as well. And I think you should follow them all. So go follow Mogglesect, go follow Amplis, go follow Ivan, go follow Nikki. Like these guys are really good people. They're very good in terms of education, really getting the message out there. They're not really, they're really, really helpful people. And I think like when you have a protocol, you definitely want people like this running it, and not other people who are basically just interested in the value of their token going up. These are the VCs that were involved. However, I don't think they're as relevant. I mean, it's nice to see like GCR and Stanny and some of these big names are here, even Kobe as well. But I don't think any of these guys are relevant anymore because their tokens are pretty much all vested now. So they don't really play too much of a role anymore. Now, in terms of security, as we mentioned before, I think it's good to see that Gearbox take it seriously. 10 plus audits. You can read all of the reports directly there on their docs, including like recent audits at the end of 2023. They also have a bug bounty with some pretty good rewards if you do find any sort of high severity or critical severity bugs. I think it's good to see. Every protocol should do this. So what is my investment thesis? Well, I think Gearbox has some very, very good products. You could argue that at the moment, because of the significant demand on the restaking products like EtherFi and Renzo, is owning Gear somewhat akin to having eigenlayer exposure? Is it eigenlayer beta? Potentially, a lot of people are saying that. And I think that has formed part of the narrative at the moment, especially because of why the TVL has gone up so much. 150 million already. Only 100 apps in DeFi today have that, and this is consistently going up. So I would like to think that in a couple of weeks' time, why couldn't this be 200 million plus? And I think as it goes up, you could argue that the value of Gear should follow through. I think it's great that they have fully working products, all generate fees, real yield focus, which I think is great. And I think we've finally got a real demand for borrowers to basically use Gearbox. I think that probably wasn't the case as much before, but now there is. Now they've got the attention as well. They've got new products coming. The Athena shard has just come out. Why couldn't they just start creating leverage products for literally every other point system, every restaking protocol? I think they occupy multiple narratives. So not only is it derivatives, not only is it like general DeFi, it's also eigenlayer, it's also restaking. You could argue it's also stablecoin exposure with Athena. Like, I think it's fantastic for that. Now, when I look at competitors, I mean, look, you've got your perps like GMX, 530 million market cap, like 5 times higher. You've got Pendle, 300 million market cap, but 800 million FTV, like 3 to 8 times higher. I know Pendle does have 3 billion TVL, and Pendle is also a fantastic protocol, something that I really, really do enjoy. But just wanted to point that out there. You've then got Alpaca at 40 million market cap. I think Alpaca doesn't have the same sort of product as Gearbox. They have lower TVL, it's on BNB, doesn't really have the same product market fit in my opinion, and I think they have less number of users as well, less a significantly different product suite. But they are a direct competitor, and they do have leverage farming as like their main product, you could say. And then there's Airpuff as well, which is unreleased. They're going to focus on leverage restaking, but remember that Gearbox obviously offers 2 other products with margin trading and leverage farming too. But this is coming out in Q2. So the question is like, does Gearbox have what it takes to beat the above? And I think based on what I've said so far, I do think so. Now, as I always like to do in my deep dives, I like to cover the bull and bear case. So I'm just going to rattle off some of these different points here and let's just mention them. So first of all, Gearbox has multiple working products. They have points, they have farming, they have margin trading. All of them work, and these traders can benefit from them. On the other side, you've got a product for lenders where they're able to earn double-digit yields at the moment, which is pretty good, with 10 plus audits for security purposes, bug bounties, and a reserve as well. Now, one of the important things that I probably didn't touch upon much is that Gearbox has been around for a number of years, but it's been on ETH mainnet, and ultimately that's meant that generally Gearbox has been a protocol for whales. But with the recent Arbitrum support, it opens up a completely new user base to Gearbox, and I think that we're going to see the number of users interacting with Gearbox increase significantly because of this. The cheaper gas fees, the cheaper access to credit accounts, I think will make a massive difference. And I think that is a really important case when it comes to thinking about my bull case for Gearbox. They ship products really well, whether it's restaking recently with Athena, the Arbitrum, all of it's been in recent weeks, and I think Gearbox really has brought a lot of attention to itself because of it. My personal opinion is that investing in Gearbox is somewhat akin to having eigenlayer exposure or eigenbeta. I think eigenlayer is probably going to be worth between $30 to $50 billion FTV, and so Gearbox at 100 million, which is 1/30th. Not even 1/30th, 1/300th of that, I think is fantastic. It's the cheapest way to get eigen points at the moment as well, and that's what a lot of whales are doing, especially when you compare them to the prices on whales market. You're basically getting your eigen points at like 1/4 of the price. Also, the other thing is like you can actually earn points on some of the products for lenders now as well. I didn't actually touch upon that, but I think that's actually a really big deal. With EtherFi, you can actually earn EtherFi points just being a lender, and I think that's been a great partnership. Now, the last few points are basically more on the token side of things. VCs are fully out of their vesting period. Well, most of them are anyway. There's only a few left that are going to be completely out by this September 24. Cheaper FTV than competitors. Vestings are mostly done. And lastly, look, I think Gearbox has survived the bear. It's got a big treasury. They have an incredible governance structure. I think that creates like a really good base for building something really good, and I think that's pretty much what they've built now. So I'm really impressed with Gearbox. I think it wouldn't be fair for me to just talk about the bull case without comparing the bear case, because I think there are some things that are worth mentioning. Firstly, we've got the idea that on margin trading, the liquidation levels are higher than on perps, and that's because you're borrowing assets rather than trading a perpetual instrument. That does mean that if you are a trader, I don't know if you're actually going to be wanting to do your trading on margin on Gearbox at the moment. You might prefer to just use DYDX, Hyperliquid, GMX, etc. Don't get me wrong, I still think there's reasons for using margin trading. As we mentioned before, you've got the boosted trades, very composable, using various different farming strategies on top of your margin trading. You've also got the idea of like no funding rate. So there's still obviously reason to use margin trading, but I think like having that higher liquidation level does make it a little bit more tricky. Secondly, slippage when it comes to trading is actually on the entire borrowed stack. And so when you're initially farming, that can add up because you're paying quite a decent amount of slippage in order to basically enter your position. Ultimately, what that means is you need to farm for a little bit longer to make up that slippage loss. Now, the Gear token doesn't have revenue share. Some people think that that's not a good thing. Some people think it is a good thing. I don't know. I'm a bit impartial to it right now. I know that Gearbox is still fairly in its infancy, and sometimes I think when you do attach revenue models to your tokens, it means the speculative nature of them does reduce. That is a hot take by me. Some people agree with me, some people don't. But yeah, I think for some people this is quite a deal breaker. I think in terms of TVL growth, like we still need to increase it a lot more. Like when you compare Pendle having like 3 billion TVL, like Gearbox has a long way to go, especially if you think like Pendle's 300 million FTV, Gearbox is only 100 million, but Pendle has like 3 billion TVL, whereas Gearbox has 150. I know that TVL isn't the only metric that you should use. Some people like to use it a lot, and sometimes it doesn't even mean anything. But yeah, I think I'd like to see like TVL continue to go upwards, and I think volume as well. Ether mainnet makes it quite difficult to grow, but as we mentioned, Arbitrum should really help with this. And I think like one of the things that's really spearheaded Gearbox's growth is the idea to speculate on points. Now, what happens when points become airdrops and now you don't have the opportunity to speculate that way? Yes, you'll still be able to use leverage farming for EtherFi and Renzo, but I do wonder like whether or not the incredible speculation that we had right now kind of drops off a little bit. So I think the longer that we have these points programs for, I think the more benefit that gives to Gearbox right now. And in terms of Gear token emissions for the passive lenders at the moment, are they going to continue to farm and dump? What will the DAO do also with their tokens? I think it's unlikely to be a lot of inflation, which is a good thing. But again, it is a question, about kind of how they're going to manage it from here on in. You're still kind of trusting the team on that. But to be honest, I do trust the team. I think they're probably one of the best in DeFi today. And so, yeah, overall, my thoughts are, I think Gearbox is the leverage everything protocol. They do a fantastic job. I'm bullish, clearly, but I think it was important for me to mention some of the bear cases. So that's all I pretty much wanted to cover today. We covered pretty much everything that you need to know about Gearbox, how it works, the different parties, the credit accounts, all of the different products that they currently offer, and of course the bull and bear case. Let me know what your thoughts are in the comment section below. Let me know if you have any questions about it as well. Let me know what you'd like me to cover next. Smash the like button, subscribe to the channel, and we'll be back with plenty more content in the near future.